All right, well, I think I'll get started. Thanks everyone for coming. Let me share my screen. Can everyone see the Northwest MLS screen? Perfect. So this is a tool. These are some tools that are free to you with Northwest MLS, and you may be familiar with some of them. I know at first I was really familiar with the net seller sheet, but the financial tools here on the Northwest MLS, there's actually a lot more you can do with them. So I just wanted to show people this, especially for people who are slow right now and they're looking for something to talk to their clients about. This is a great conversation starter. So anyways, I'm on the front page of Matrix, and right up here in the top right corner it says financial tools. So when you click that, there is the affordability calculator, the buyer's closing cost calculator, seller net proceeds, payment calculator, and rent versus buy. So I'm going to walk through this really quick. You can start by putting the name of whatever you want, whoever the client is. Whatever. Okay, so actually this first calculator is probably my favorite because when I'm talking to potential buyers, or let's say, renters who think they're going to rent forever and think they can't afford a home, this is a great tool to show you, to show someone that they really can buy. And it's not only affordable in comparison to what rents are in the area, but it's also the down payment, which we'll get to in the buyer's closing cost portion, can be really low. So anyways, we'll go through this pretty quick. So you want to be careful before you start this, because what we're about to ask the client in this hypothetical situation is could be private information. So this may not work for all your clients. But if you have someone who you're leveling with and they're giving you information, they're not being shy, this is a great tool. So you ask your client, hey, what's your combined income? If it's two buyers, or your individual income if it's one buyer. So let's say someone makes $120,000 a year. I'm going to touch on these terms in just a second. Then let's add their debt. If somebody, you can add it one by one, or you can just add the total and other, whatever you want to do. But let's say they've got $400 in car payments and $250 in credit cards and $350 in student loans and $120 in additional. Remember, when you're putting these numbers in, this is not what is owed on the credit card or owed on your student loan or owed on your car. It is the minimum payment required. Okay, so their debt is $1,120. So what these terms are is, what is their total debt ratio, max total debt ratio? So right now that's 45%. Some banks do 50%, but generally it's 45%. So what you want to do is take their gross monthly income and multiply that. So that's $10,000 in this example. Multiply that by 45%, and that's $4,500. So if you subtract their debt at $1,120, that means their max PITI, that's principal, interest, taxes, and insurance, is $3,380. So anyways, that's saying after the debt, that's how much they could at max afford for a mortgage payment. And mortgage includes principal, interest, taxes, and insurance. Okay, so now we're going to do the interest rate. Be careful when you're at this point to not say, oh yeah, you're for sure 3.5% interest rate or something like that. You can say average is around 3.5 right now, or you can say something to that effect. But just whenever you're using these tools, just say these are estimates and they're pretty darn close, but they're not exact. So take it with a grain of salt. Let's say they're at 3.5% APR, and we're going to do a saying, what is the down payment? I'm trying to see, what did we say the home value was? Oh no, it's putting it here. Okay, sorry, I'm catching up now. So on down payment, you'd want to put what can they afford as a down payment. So let's say they can afford $1,200. And then property taxes, it's just estimating is around 1%. If you know the area that they're looking, the north end is a little higher than 1%. South Tacoma is a little lower than 1%. So it can be plus or minus, but that's just an average. And then homeowners insurance, I don't know what they're basing that off of, but that's just an estimate, obviously based off of other rates. So anyways, this is all the information you put in right here. And then over here, it spits out what they could buy. So they could buy a home at 545, 374. Their loan to value is 98%. Now that tells me right off the bat, and if you do some simple math, you can say, well, that sounds nice, but you can't get a loan for, you know, less than 3% down unless you're doing a first-time home buyer 0% down program. But anyways, I won't get into that, but you might go, okay, well, the minimum you're probably going to pay is 3% of, let's say, a loan of 500,000, so that would be 15,000. Anyway, so I just increased that, and it's saying again, so what they can afford, the home value, down payment, loan estimate, loan to value. This is their principal and interest payment, property taxes, and that's all an estimate. Then you can add HOA and it would bring everything down. So essentially what this does is it says with your current gross income, with your current debt, this is roughly what you can afford. Now, things change. If somebody has, you know, lower credit, this interest rate's going to be a lot higher. So if you move that to 4%, that just brought your purchasing power down by 25,000, right? So just remind them when you're using this is an estimate. If your interest rate's higher, it's going to be, your purchase price is going to be lower, and vice versa. This also doesn't necessarily mean that the buyer will want to pay this amount. This kind of just tells them their max, which is kind of nice. So this is saying this would be your payment for a property of this size, for a property at this price with your debt and with your income. It's possible, but a lot of buyers will be like, yeah, I don't really want to pay that much. I'm looking more around 1,800. So anyways, just wanted to show you guys that one. If somebody, let's actually skip to the fourth calculator now. And let's say somebody says that, right? They say, well, I only want to be paying $1,800 a month. Well, calculator we can go for that would be the payment calculator. So this is just a normal mortgage calculator. You've probably all seen this. So we'll just cruise through this really, really quick. But let's go $450 on the purchase price, down payment of, it's frustrating that they don't let you do that as a percentage. Most calculators do, but we'll go 450 times 0.03 is 13.5. That auto calculates the loan amount. Loan term, you can change this to any term if they're doing a 20-year, 10-year, or 15-year. Interest rate 4%. The cool thing is when you're working with one client, it takes what you put on the first calculator and moves it over to the next calculator, which is kind of nice. You're not re-entering everything. And loan start date, we'll say, is September. Okay, so this is saying your payment would be $2,083.92 plus homeowners insurance, mortgage insurance, total payment $2,518. So your buyer just said they want their payment to be $1,800. Okay, perfect. So we know we can't afford $450. So let's bring it down a bit and see what this does. $350, and let's bring down the down payment to 10.5, 3%. And we're at 1958, so we're getting pretty close. Anyways, I'll stop there. You guys can see how a mortgage calculator kind of feeds right from the affordability calculator. I'd start with the affordability calculator to show here's your max that you can spend, and then most of the time they're gonna be like, well, what type of a home can I buy with this type of payment, and then you can kind of dial in. But going back to the affordability calculator, the reason this is so helpful is if someone makes $60,000 a year and they've got, you know, a lot of debt, this will kind of save you some time and them some time to be where you can go, okay, so with this annual income and this debt, your home that you could purchase is $150. Not a lot out there. And that's not to say, so have a good day, but it does help you a little bit, right? It does help you from wasting your time and going out and looking at homes. If you did this first, you can at least say, okay, let's really talk to a lender first and see what they can do. You know, perhaps they can get you a debt consolidation loan where it'll bring your minimum payments down to, you know, $250 a month. And, you know, if we did that, now you can afford a $266,000 home. That just added, you know, $115,000 to your purchasing power. So anyways, I'm just showing you how this tool can help save you time, and it's something that most buyers have no idea how to calculate, none at all, and they don't even know the process. I was just talking to a friend of mine, who asked if I had any rentals. I said I don't really work with rentals, but you know, I'd refer him to someone who did. And I just kind of started talking to him about interest rates and everything, and got him to speak to a lender. And sure enough, they're probably gonna be buying the next month or two. And all I did was just kind of push him a little bit. I showed him this calculator, and we just he went from being, oh no, I can't afford to buy a home. And I was like, oh, well, tell me what you mean by that. And just kind of strung it along a little bit. And the truth was, he just had no idea that he could buy a home. So anyways, kind of a cool tool. Buyer's closing costs. So we'll go back again. It automatically takes purchase price from the other calculators you're using, which is cool. But purchase price of $350, down payment, that's 3%. Loan term, loan interest rate. If the buyer is paying discount points for a lower interest rate, you can add it here. You can just skip that for now. If the buyer is getting costs paid by the seller, let's say the seller is paying $5,000, you can put that there. Going to do Pierce County here. And this is estimates. Obviously, escrow fees and title companies they vary, depend on the company. So just put that asterisk by that and just remind them this is just an estimate. Could be more, it could be less, but this is calculated off of the purchase price. So if you change the purchase price to 300, you see how it all changes. So, which is awesome, obviously. Oh my gosh. Okay, appraisals are more like 750. If you know any of these fees, you can add them. If you don't know them, then just leave it as is, right? If you have no idea what they're going to cost, this is, again, we've already disclosed them. This is an estimate. Okay, so then it takes your total loan cost, your total settlement cost, your total prepayments, total other costs, buyer's costs paid by the seller. So that's subtracting 5,000, and it gives you their total closing costs. So this would be the third tool I use, right? We start with the affordability calculator, then we go to the payment calculator, and now they're like, well, how much would it really cost? Like down payment, closing costs, and everything. Now you can go here and say, okay, $12,739. And I may be off, but I'm probably not off dramatically. You can also even add okay, an inspection is gonna be $450 plus a $200 sewer scope, that's $650. Now you're getting really exact, right? You're saying, okay, it's gonna be $13,389, and that's probably within a few $100s of exactly right. And again, that just alleviates any stress that they may have had about like, is something else gonna come up? No, this is pretty spot on. And you're not pulling numbers off the top of your head, which is nice. Okay, two more calculators. I've seen much better rent to buy calculators. I'm just gonna lead with that. They just give you a lot more information. If you want a better rent to buy calculator, let me know if you're discontent with this as I am. But I'll just show you guys this one really quick. So an evaluation period is saying, okay, let me step back. So a rent to buy calculator, the point is to point out to a buyer that yes, your payment may be higher, maybe not, but it may be higher if you buy a home, but there's a lot of other benefits. You get you get to write off the mortgage, right? The interest on the mortgage. You have appreciation. That's obviously huge. We talk about that all the time. There's other things I'm drawing blanks on. Come on, guys, why do you tell people to buy homes? Anyways, there's all kinds of great reasons, but the point of a rent versus buy, it calculates appreciation. It calculates the write-off for the interest. and kind of spits out this is a benefit of buying versus renting, taking into account also everything else. So let's go through it really quick. Valuation period is how long do you want to evaluate this over? Like 5, 10, 15, 20 years? Let's say 10 years just for fun. Tax rate is what tax bracket are they in, because that affects the write-off for the interest. So let's say they're 25%. Savings interest rate, what that is saying is in comparison to if you put your down payment and your closing costs into a savings account. So 0.75, I don't know.
Well, that's generous.
Yeah, that's probably very generous.
Unless it's in a CD somewhere or something like that. But.
Yeah. Okay. So let's bring it down to 0.25.
There you go.
Okay. Monthly rent, they're paying $1,400. Renter's insurance is probably $50 a month times 12 equals 600. Yes, 600. And
So
then it's saying, what was that?
Nothing. I answered my own question.
Okay. The rent increase is just an estimate. You can plus or minus it, but that's just saying rent's going to go up every single year on average by 2.28%. Okay, now we're putting the purchase price in, their down payment, their appreciation rate. I don't want to be optimistic, but I mean, if we're looking at the past 4 or 5 years, we've appreciated by way more than 2.28. I mean, we've appreciated in Tacoma by 12% over the past 3 years. Now we may be going in a down. You can take it or leave it. You can leave it at the automatic. To me, I'd say I think if we're talking over 10 years, it would be shocking to me if we didn't increase by at least 6% on average over the next 10 years. But that can be whatever you want it to be. That's a guess, and you should say that when you're talking to a buyer. Obviously, that's speculation. Selling cost rate, that is the cost to sell it. So if they were to sell in 10 years, you got your commissions, you've got your closing costs, et cetera, as the seller. Property taxes, homeowners insurance, annual maintenance. You can even add that, which is pretty cool. I'm just throwing random numbers in. You guys can play around with it. Okay, so this is what it spits out here. Net cost of buying is $62,000 over the 10 years. So that would be the property expenses. Nope, that doesn't. See, I admit right off the bat, I'm not a huge fan of this rent to buy calculator. The ones I've seen in the past kind of have like a graph that that kind of show it more clearly. So this is not my favorite. Benefits of buying $255,000. I'm not sure where they're getting that number. So of all the calculators, this is the one I liked the least. Let me know if you're interested in seeing another one. There is one that I have an app for that I think is really awesome. But
Isaac, why don't I include the app that you recommend in the recap?
Yeah, let's do that. We'll do that. Thanks for speaking up, Robin. Okay, perfect. So last but not least, I want to show you guys sellers net proceeds. All the other ones I've been showing you are ones that you'd use if you're talking to a buyer, but this is probably the most frequently used tool that I use when I'm talking to a seller, and we've got 4 different offers at different price points with different closing costs that they're asking for, and one's closing in 60 days and one's closing in 30 days, and how does that affect the proration of taxes and et cetera, et cetera. This calculator is clutch because it covers all of that. So we got a selling price of $350. You can add the mortgage balance. If you don't know the mortgage balance, just skip it, and they know what their mortgage balance is, and they can subtract that easily. But for the sake of this, let's just say the mortgage is $150. They have a second mortgage, a home equity line of credit, anything like that. Residential in Washington, there's no such thing as prepayment penalties, so that won't ever be applicable. Okay, now you put in the commissions, say 2.75 to each side, or whatever you are charging. Let's say this buyer that we are reviewing right now is asking for $2,000 in loan costs paid by the seller. It auto calculates the escrow fee based off of Pierce County. That's an average, again, not exactly. Same with the title, same with property taxes. However, when I'm doing the net proceeds, I go and I see have they paid taxes, and at this point in the year, like even with the extension through June 1st, they've all paid taxes. So I would say, so if their property taxes are roughly 1%, they're calculating that being $3,500. And if they've paid half of that, that would be $1,750. Does that make sense? So you want to do that, and that helps with the proration when it closes. Local excise tax, if you don't know it, just leave whatever they have here. It's probably correct. Okay, then you can add anything else here. If there's an HOA transfer fee, if you're paying for a home warranty, anything like that, you can add it here. You know, if they took a loan out from a friend to remodel or to do new flooring, and it was before they list and it was $10,000, you can add that there, right? And then it spits out their net proceeds. There's one. Okay, so this is what I wanted to show you guys. So this is really helpful because right now we got 162. I'm gonna write this down. 162,338. Okay, let's say we got a very similar offer. It's 355, but they are selling a home, so they're going to be closing at the end of August, hypothetically. We're leaving the mortgage balance, leaving the selling off his commission. They don't want any loan costs, and bam, that spits out 168,983. Anyways, that again, the reason that's so helpful is it shows you it shows you the bottom line. This is what your bottom line payment difference is going. I mean, what your bottom line net proceeds is going to be difference. Accounting for everything, including proration of taxes and the one thing it doesn't account for, I just thought of this, it doesn't account for an extra month in this case of principal and interest payment. So you could even add that right here. I just thought of that. So if you're paying an extra month of principal and interest, you could add it here if you wanted to. But anyways, that is the purpose of this calculator, and that is, again, in my opinion, the most important calculator. If you ever have a listing, when you have a listing, I would absolutely utilize this, especially when you have multiple offers. And it doesn't take long to create a net proceeds spreadsheet for each offer that comes in, unless there's some that aren't even close, because it really just creates a really clear picture there at the bottom.
It's too bad they don't have like even Amazon or something else, right? Where you can compare, you can fill out individual ones and maybe just change the, closing a couple of numbers, and you can have scenario 1, 2, and 3, and you can see them lined up to where, you're not writing down. I mean, it's no big deal, but it'd be nice to see the comparison on the net proceeds to show a seller.
You're totally right. I completely agree. I mean, because what you have to do at this rate is you have to go print, and then there it is, and then save it, and then do next one, print and save it, print and save it. So you're totally right. I've actually given that input to them before. Wouldn't it be killer if they actually just input this into a spreadsheet and they had different columns for each one? That'd be killer. But I haven't seen that. I also wanted to show you that this calculator also calculates for with a VA loan, there's an extra VA fee. Anyways, so it calculates for that too. FHA, just a $300 fee. Anyways, it's pretty intuitive, and it really, again, I always tell my clients, it's not going to be 100% exact, but it's going to be pretty dang close. And it's helpful because it takes away all the questions that they have, or the majority of the questions they have about what's actually in my pocket at the end of the day. So, well, thanks for bearing with me. I kind of stumbled over my words today, but I hope those are helpful. Again, my two favorite seller net proceeds and the affordability calculator. This one's kind of new. They haven't had this forever, but I love that. If you're working with a buyer who, is on the fence and they're close with you and they're willing to talk finances with you, tell you about their debt and their income, this is clutch. I mean, it really gives you a really clear picture. So, any questions?
Good job. Thank you so much.
Yeah, thanks for coming, everybody. And we will do this again on Thursday.
We're not gonna be able to get it stopped.
Thank you, Isaac.
Yeah, absolutely. Have a great day, guys, and I'll see you Thursday or whenever I see you next.
I'll send out the recap later today.
Thanks, Robin.
Hey, Robin.
Hey, Isaac.
Yeah,
Isaac, can you stay on for just 1 second? I just have a quick question for you. It has
absolutely.
nothing to do with this, so
No worries.
okay, thanks.
Yeah,
Well, if you
just you and me now.
So I'm pretty sure I know the answer to this, but I thought since you were there and I got you on the line. So everything with the current listing, the closing is going fine and going well, but now I've got to get my kid moved out, right? So closing's the 23rd or sooner. And at this point, appraisal's in, everything's fine, everything's conditions are met. And I'm going to touch base with, escrow and see if they have any issues. I haven't heard of any, but is there anything that you are aware of that could go wrong before I move my 18-month-old daughter out of her house?
Yeah.
You know what I mean?
It's so tough, man.
I know they theoretically, the only thing around is the financing contingent, right? But it
Yeah,
doesn't
so
look
the only way they're going to get out at this point, now that the appraisal is in, is by them losing their job. That's really it. Or quite literally, if they died. I once had that happen where a buyer actually died, and so obviously they didn't qualify for the loan anymore. And we were 3 days from closing.
obviously.
Yeah, so we were 3 days from closing, and it was kind of like a wind out of the sails. Like, what?
Well,
And then we all felt guilty because we're like, oh, all this actually is kind of tragic. Somebody actually died, but it was really a huge bummer for the seller. I mean, when I relisted it on the market, I was like, what do I even say? Like, everything was fine, inspection was fine, financing was fine, buyer died. So
the first question is, in the house?
no,
I'm not taking possession yet.
Crash. Yeah, it was crazy. Anyways, yeah, I mean, the answer is, probably more than 95% of transactions at this point go through. So, but there is that 5% chance that something could happen. So
But as far as like loan fraud and that kind of stuff, they can't, if everything is on track, they can't just change their mind and walk away and say, no, we didn't qualify for our financing, right? Theoretically.
So I've got two answers to that. The first answer is yes, you're correct. The second answer is it's really a pain in the butt to get somebody's earnest money if they're being stubborn. So yes, you're correct, but it's possible that someone could be very stubborn and be like, well, I know we don't deserve the earnest money, but we're going to fight for it anyways and cause problems. So again, I'm just kind of giving you asterisks. Yes, you're correct, but crazy things happen. What was your date of mutual acceptance? It
was when the 22nd of May, I believe.
22nd. Okay. So you're not even close. So there is a on the form 22A. Have you been in one of the meetings where I've talked about the 22AR and 22AL?
Sounds familiar, but
so if you review your form here, I'll share my screen. Okay, so on the form 22A, down here you have this timeline. And it says at any time 10 days after mutual acceptance, seller may give notice requesting information related to the status of the buyer's loan. So I'd send that out today. And it's not a red flag. I mean, an inexperienced broker might get that and be like, hey, what's going on? Why are you sending this to me? And just say, well, read the damn form. It's nothing scary. We just want an update on the loan. And well, you already know the appraisal happened. That's fine. We just want an update. And the 22, they send it back with a form 22 AP, and it's a bunch of boxes, and it says, have they done this? Have they done this? Have they done this? Have they done this? Anyways, they have to reply to that within 3 days, and which will make your sellers feel good. And anyways, if they don't reply, then you go right into this one. So this is a 30-day timeline, so you're probably not even close on this one.
I'm not seeing your screen, but.
Oh. Can you see it now?
Nope.
There we go.
Oh, okay.
Okay, sorry. So this is a 22AL, section 2. And then they have 3 days to send the 22 AP. If they don't send the 22 AP back within 3 days, then you can send the 22 AR. And let's go look at the 22 AR really quick. And this is another one where some people will, I've heard brokers be like, hey, what the heck, are you trying to terminate? And it's like, no, we want you to waive your financing. So what you do is you send the 22 AR, and going back to this really quick, if they do send the 22 AP within 3 days, then you can do this after 30 days, which probably won't be applicable because you'll probably be closed. But this is normally available to send after 30 days. But at 30 days, you send them this form signed by your sellers only. And it says, seller hereby gives notice that if the buyer does not waive the financing contingency, seller may terminate this agreement anytime 3 days after delivery of this notice. So it's just saying it's been 30 days. Like, we have no intention of terminating, but your financing should be good. So waive your financing contingency. And most of the time they do it. If they don't do it, it just gives you the option to terminate if you need to. So anyways, this doesn't solve all the problems, but it's a good process to get into. Send the 22 AL anytime after 10 days after mutual acceptance. And then whether or not you get the 22 AP, when you can, send the 22 AR and just try and get them to waive their financing contingency. Because if you get lucky and they do, then they've got absolutely no outs. Even if they were, God forbid, to pass away or lose their job, you'd still get their earnest money.
Okay, so there's 10 days, which the loan information there, I can do that, but the 30-day thing, we haven't been 30 days, so.
Right. So the only exception to the 30-day thing is it says here, buyer's notice shall be blah, blah, blah. Where is it? Okay, here it is. If buyer fails to timely give to seller a completed loan information notice, that's the 22 AP, seller may give the right to terminate notice described in paragraph 3 at any time after that date. So if you send this 22 AL and they don't send the 22 AP like they're supposed to within 3 days, then you don't have to wait 30 days and you can send the 22 AR immediately.
Okay.
So that's what I'd do if I was in your shoes, especially because these buyers have been kind of a pain in the butt and you are a little weary. But there's also an argument to be made that that'd be rocking the boat. I mean, I send it almost every time I represent a seller, unless the seller has been a pain in the butt. There's a few transactions I've been in where the seller has just been a pain in the butt and the buyer is hanging in there, and I feel bad for the buyer, even though I'm representing the seller, and I'm like, you know what, I'm not going to rock the boat anymore. They've already given us a lot. But in your situation, I almost always send the 22 AL followed by a 22 AR as soon as I can.
Okay.
Yeah.
Sounds good.
Cool, man.
Like I said,